Hey, welcome back to the dive. US President Biden on inflation, safe haven assets in the current environment, oil, and exchange traded funds are a few of the topics that our guest will deep dive into today. He is the CEO and Chief Investment Officer of US Global Investors and one of our regulars here at the dive. Frank Holmes is joining us today. But before we bring Frank on, just do me one quick favor and just go ahead and smash that subscribe button for me, please. Hey, Frank, nice to see you. Welcome back to the dive.
Great to be back. I just celebrated my birthday in DC, and I got out just before the State of the Union last night. So it was good being in DC. What a great city.
Oh, happy birthday. I'm glad you got away for it. That's awesome. Okay, so about the State of the Union, Biden addressed last night that getting prices under control is his top priority. What is your take on how President Biden addressed inflation? And do you think we will see a reaction from the market?
I haven't really seen that type of reaction responding to it. If he wants to really get inflation under control, then you're going to have to get people that are real engineers to rethink all this push for going green so quickly. All the difficulties with energy through $100 a barrel and all these concerns that everyone's talking about has to do with we saw in Europe. Germany shut down all their nuclear reactors. All of a sudden, they have to rely on Russia for their energy. It's so easy to create big inflation from energy. And then you have a war, it's even more so. So I think they have to really stop getting political scientists to come in to manage this policies for climate change. You have to get real logistics and engineers in creating reasonable, fair timelines, along with the United Nations policymakers. There's not many really technically competent engineers at the UN drafting these policies, like shipping, like what type of ship and what type of oil can go into a port and how fast they can do all that. They make it very quick and abrupt, and it creates global inflation.
So as the West steps up sanctions against Russia, Goldman Sachs raised its commodities price forecast, citing supply disruptions and a problematic inflation outlook. What commodities should investors pay close attention to? And given the current environment, what do you believe is the best safe haven asset?
Well, clearly, when you look at energy and oil coming out of Russia, Russia's the second biggest producer in the world, exporter. That's a major source of energy, of cash flow, is selling energy. So I think that knocking that supply off, we're going to have supply that has to now go to other places to help Europe out, and possibly also going to not Middle East, but going to Asia and Japan. So I think all these are, once again, disruptions of supply lines, and anything that disrupts a commodity supply, you see this big spike. Like copper strikes in Chile, all of a sudden copper prices surge. And I think we're witnessing palladium. 40% of the world's palladium comes from Russia. Guess what? Palladium prices are about on a tear. Copper prices also on a tear. And I think you can just go through the list and say, what does Ukraine have? Well, we're seeing fertilizer. We're seeing that they're huge in energy. All of a sudden, they're not able to export their energy. They're not able to export fertilizer. That'll have an impact on food production in India and in other countries around the world. They're also big exporters of wheat. So we have to take a look at commodity supply side restriction, and the world's going to continue to eat. I believe that the G7 collaboration will just print more money. They'll find another way to deal with it.
So Canadian Prime Minister Justin Trudeau has announced a ban on Russian oil imports following the country's invasion of Ukraine. And now all eyes are on Europe, as they're obviously in a tough spot given their dependency on Russian oil and gas. Do you think that Europe can restrict its imports to a meaningful amount in the short run?
That's a jump ball, or they would say in Canada, it's a drop puck. I think that these disruptive lines, there has to be better macro policy decisions. I'm all for clean air and clean water, but some of the other policies are very emotional and they're creating this inflation. So they have to work backwards. And it's not to forget the amount of money printing. You add that you can only keep printing. Ian McAfee passed away years ago with deliberations research used to show that every cycle for the stocks to trade higher, the government had to print more and more billions. And now we're seeing this mechanism of modern monetary theory being approached. It's just going to be now trillions of dollars to maintain global economic activity. And I think that that's what we're running into.
So as you mentioned earlier, US oil jumped to a 7-year high above $100 a barrel. This is a concern for many investors. Do you think the Russia-Ukraine crisis could trigger an oil supercycle?
I think that oil stocks are still undervalued. I think it's always good to have exposure to them. And it makes a lot of the renewable energy plays from solar and wind also on a relative basis very attractive. So we're seeing in Texas, who are the masters of fracking and the tipping point for exporting energy, are also building out 20 gigawatts of electricity with renewable electricity and using gas to recycle that gas. So I think that who's going to really benefit are jurisdictions like Texas will benefit from this, and they have policies for renewable energy, and they have the great state where it's located to be able to do it. And so I think as investors, you have to say, okay, here's a problem. What's the solution to the problem? How do I get ahead of that curve and look at it? So any boom in oil, the greatest threat you have to economic activity is the gas pump. If the gas pump's price gets too high too quickly and consumes more of someone's income, they will cut back in other spending, and that leads to a vicious down cycle. It is, can they get other sources of energy? And I think that renewable energy is a great boom industry.
Now, in one of your recent blog posts, you mentioned that travel and tourism in the US will outpace pre-pandemic levels this year. What trends are you noticing as the world shifts out of pandemic mode?
The most important indicator the TSA came out with right at the bottom of this crisis in 2020, and it was how many people they cleared a day. Pre-COVID, it was 2.7 million people a day were cleared to fly in America. Actually, 2 million Americans fly back and forth, and 700,000 are inbound from Europe and from Latin America and Asia. So that's 2.7 million, fell to 90,000 in April of 2020. That data is published every day, and you can see it. It's free, and it's trending up. So as it went above the 50-day moving average, our JETS ETF saw big inflows. And then now is above the 200-day. Once again, you have much more upside than downside. The exciting part is the stock went from $11 up to 28. Remember, it was in the 30s. It fell down to 11, went up to 28, fell down to 19 range, just under 20, and now it's risen above it. So I think that there's great potential for this to go back to $30 if the global economy is able to maintain its pace.
Now, regarding jets, European nations and Canada moved to shut their airspace to Russian aircrafts. Does this have a material impact on the airline industry?
No, Russians, who wants to fly Russian airplanes? Come on, unless they're flying a Boeing. No, I don't think so. I think what's really important is what is happening to other airlines and airports, like the fact that Europe is opening up. The de Gaulle airport is in our ETF jets. And it's booming. Thailand has opened up. Bangkok is a public airport. Beijing, when Beijing really opens up China, you will see a huge swing in flying all over the world. The other thing is I want to share with you about the airlines industry. At the bottom, as we came over the bottom, there were new IPOs. No one could believe it. Breeze came out. Other new airlines were created in Europe and in America. And now we're seeing mergers, the discount airlines. Okay, what's going on here? People want to travel. People want to get out of frigid cold Canada and go to Florida, go to Texas, or from Vancouver, they want to fly down to the Palm Desert. They want to get out of the cold and the dreary weather. So the same thing in Europe. So now that we've gone from IPOs to mergers and acquisitions, it's a very vibrant industry. And I think it shows the pent-up demand to travel.
Definitely. Okay, so you also recently launched the C ETF, which invests in shipping companies, including air freight and air cargo. How could the companies in these ETFs be impacted by geopolitical tensions overseas? Is this going to be a good thing for investors in the space?
When I first launched JETS, it was just coming out of all the bankruptcies and all the crises of the aftermath of 2009. And in the airlines, everyone was negative on the airlines. Warren Buffett doesn't like them. This is negative, that is negative. But the global economy was doing exceptionally well. And the ancillary fees back then were like 40 billion. Well, they went to 100 billion. The airlines just exploded and taking off. So I think that the global cargo issues are not going to go away. All the climate change policies are not going to evaporate. And so they're going to turn around and basically be a driving factor for supply line restrictions. And if you have a coup or a problem like you're having in Russia or a shutdown in some other place, it just disrupts the supply lines. And I think that they have tremendous pricing power that's going to last for many, many years, like the airlines have been able to prove. So I remain very bullish when I take a look at their pricing power, both ships and jets.
So one more thing before I let you go here, Frank. Are there any final thoughts that you'd like to share with us today?
Well, in the crypto space, I hear this whole argument, and I want to, for your followers, when I first was involved in the launching of HIVE Blockchain, on a regular basis, it was Ethereum is going to go from proof of work to proof of stake. What does that mean? Proof of work means you earn new Ethereum coins because you validated the transaction. And every time you validate that it's a good transaction, you get new Ethereum coins. It happens every few seconds. Bitcoin is every 10 minutes. So when it comes to this sort of proof of stake, the idea was that we'll make it faster and cheaper if we go to proof of stake. And that is much more the Ripple model. And Ripple is a blockchain, but it's not, there's no electricity being used to validate how many Ripple coins are out there. You need to have electricity, which creates a digital asset, like Bitcoin is a digital asset. Ethereum is a digital asset. Ripple is not. Ripple is a security. The SEC are going after Ripple because they basically sold securities. They were not a validator in how they created the new coin. So we mine Ethereum. The group wants to try to move over to a proof of stake. It won't. I do not believe it's going to happen. It hasn't happened. It's a dream. And I think the ecosystem is so big all over the world with tens of millions of kids who are gamers and mining Ethereum that are also computer designers and graphic designers mining Ethereum when they go to bed. It's such a robust ecosystem that it's not going to happen. And someone from Motley Fools in Canada wrote an article that HIVE was at risk because of the SEC going after Ripple. If they won, then they would go after Ethereum. I think that's pretty big stretch. I think that a carbon tax credit cost for all these other crypto miners that are not ESG compliant like HIVE is, that is a much bigger real risk. And I think that it's just out there to understand that Bitcoin and Ethereum are made with using electricity, which is paid for. And you have to buy expensive equipment to process it. So it is a digital asset. Very different than a Ripple.
Somebody's just tossing around a lot of FUD out there, I guess.
Lots of fun.
All right. Well, thank you so much for coming on today and catching up with us, Frank. It was nice to talk to you.
It's great to be with y'all.
Thanks so much for watching today. We'll be back again tomorrow with the latest news and updates, so be sure to hit that notification bell before you go.